Hello and welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Great to have you join us on this beautiful Saturday evening. Let's begin with a review of some of the global equities markets. Starting with the U.S. market, we see stocks on Wall Street fell at the close of Friday's trading session. In a rough first trading week of the year as tech shares were battered by rising interest rates. The Dow Jones Industrial Average dropped by 0.01%. The tech-heavy Nasdaq, which posted its worst week since February last year, fell 0.96%, while the S&P 500 lost 0.41%. U.S. 10-year Treasury yield topped 1.8% on Friday, continuing its 2022 run from a 2021 year-end level of just 1.51%, following the release of the Federal Reserve's December meeting minutes on Wednesday. For the European equities markets, they closed lower on Friday as investors digested Eurozone inflation data and a weaker than expected U.S. jobs report. The Germany's DAX and the France CAC index closed in red on Friday, down by 0.47% and 0.42% each, while UK's FTSE 100 index climbed by 0.47%. Meanwhile, shares in Asia Pacific were mixed as investors continue to assess the impact of a potentially faster than expected policy tightening by the U.S. Federal Reserve. Japan's Nikkei 225 and China's Shanghai Composite fell 0.03% and 0.18% respectively, while Hong Kong's Hang Seng Index was up by 1.82%. Now to the fixed income market, where trading in the bond secondary market opened the first week of 2022 on a bearish note as investors upwardly repriced select instruments amid tepid demand. Average yield closed higher the short and long ends due to sell pressures on the January 2026 and April 2049 bonds accordingly, but declined at the mid-segment as investors demanded the February 2028 bond. At close of trading on Friday, the market ended mixed, while the overall average benchmark yields closed at 11.91%. Elsewhere, slight bullish sentiment returned to the Treasury bill secondary market on the back of declining primary market offer rates in the NTB segment and increasing bids for automobiles. However, the close of trading on Friday, the market was bearish, with selling interest seen across all maturities. Average benchmark yields for T-bills rose by 3.15%. At the unlisted securities market, the NASD OTC Securities Exchange closed the week on a positive return as index returned increased by 0.43%. At the same time, its market capitalization closed higher at 631.72 billion naira as a result of positive movement in prices of some listed securities. However, total volume traded during the week fell by 99.94%, while total value traded during the week decreased by 99.88% against the 1.93 billion naira value recorded last week. Meanwhile, Central Securities Clearance System (PLC) emerged as the top among the three most traded securities by volume. Meanwhile, the domestic bourse began 2022 on a positive note as both the all-share index and the equities capitalization re-entered the 43,000 point level and the 23 trillion naira level within the week. The main indicator of equities performance jumped by 2.66%, while the market cap surged by nearly 6%, gaining almost 1.9 trillion naira in just 4 days. Sectoral performance was mostly positive as 4 out of the 5 key counters of listed equities ended in green, while the consumer goods sector was the lone decliner. Academy Press led a pack of 39 gainers, up 20%. Sooner Assurances topped a list of 31 decliners, down by 17.78%, while the trio of Boa Foods, Wema Bank, and Trasco were the major contributors to more than 2 billion shares traded this week. All right, our first conversation now will review the market performance for the first trading week of 2022 and get an outlook for the year. To discuss this, we have Mr. David Adonri, a stockbroker with High Cap Securities Limited, joining us this evening. Good evening, sir.
Thank you, Ladi. Good evening.
Yeah, great to have you.
I'm happy being with you.
Yes, so the domestic stock market, begins the year with a 2.7% return year-to-date performance, and that's about 1.93 trillion naira gained in just 4 trading sessions this week. Let's get your view on our performance so far.
That was really wonderful. The equities market firing on the bullish note. at the beginning of the year, achieving within 1 week what the market could not achieve throughout the whole of December last year. So it's a wonderful signal, and we look forward to the sustenance of the performance of the market, just like we have seen in the first week. But it's not really going to be easy because if you look at the upsurge in the equities market, it was facilitated by just a few transactions. Boa Foods, which is an iconic consumer products company, took the market by storm. The listing of Boa Foods impacted heavily on the equities market, and the surge actually continued right from the day it was listed on the 5th up till Friday. The demand was very, very high, and it's really wonderful what Boa Foods has brought to the equities market at the beginning of the year. But the market also enjoyed some appreciation due to the movement in the price of Airtel Africa, which is an iconic and a large cap company. So those kinds of movements were actually specific to a few securities in the market. The movement did not spread entirely across the equities market. And so while we jubilate at the storm with which the market has started, or the bullish storm with which the market has started,
Right.
but yet we still need to be cautious because you just informed us of what is happening in the US and how the indices are coming down in the US in reaction to the monetary tightening policy of the Fed and the increase in interest rate. Other markets in the world are also already reacting, but the reaction here in Nigeria may be delayed, you know. So,
Right.
but eventually Nigeria will see the impact of such a development in the advanced economy, because this year inflation is going to increase globally. And so the advanced countries are already taking preemptive measures by tightening their money supply so as to combat the inflation.
All right, Mr.
As
Adori.
such, yeah, economies.
Yeah. So
Yeah.
I'm guessing it's a cautious, optimism right now. Don't get caught up in the euphoria. Anyway, lately we've seen investor sentiment pick up, at the NGX. What's driving this early rally that we've seen, at the market, which, failed to appear in the last trading session of 2021. Everyone was expecting the Santa rally.
Yes, of course, Larry, the Santa Larry rally was suppressed as a result of the heavy transactions in the primary market of the capital market. In December, there was this issue of Sukuk, wherein the DMO requested for about 250 billion naira worth of issued 250 billion naira worth of Sukuk, but investors subscribed to the tune of over 850 billion. So that tied a lot of financial assets in Sukuk and in the primary market. We also just read that in addition to the Sukuk, the federal government also issued some savings bonds in December, which led to the migration of assets to the primary market. Then to crown it all, also in December, we had the mega offering of MTN Nigeria, which set the primary market alight at the last 2 weeks of December. So those events were monumental enough to stifle activities in the secondary market. Hence, we did not see that. But what we are seeing now essentially is an interesting rally. But this rally is precipitated by the listing of Bua Cement, which is an iconic, highly diversified uh, company in the consumer products sector. Boa Foods is a known name in that sector and is highly diversified, having activities uh, cutting across. The company runs rice mills, oil mills. It also has flour mills, wherein it produces flour products and pasta. So when that when that listing hit the market, it attracted a lot of investors into the market. And so that was why we saw the great attraction and the demand for that stock, which is still building up. And then we also saw the demand for Airtel. Airtel went into a transaction in East Africa, I think precisely in Tanzania. And investors interpreted that transaction to the fact that
It
it
seems they
could
saw it
impact
as
positively.
positive.
Yes, positive, that could impact possibly on the bottom line of Airtel. And if you also look at transport, investors are probably trying to ambush that security because the third quarter performance from the transport was beyond imagination. And if that translates to end of year distribution to investors, of course, those who are trying to ambush it now will believe that they have taken the correct
All
decision.
right.
So a combination of those factors propel the market so far in the first week of the
All
trade.
right. All right, Mr. Adori. So the latest domestic and foreign portfolio investment report, released by the Nigerian exchange, shows that foreign investors pulled out a total of about 209.76 billion naira from the Nigerian stock market from January to November last year, after injecting 189.42 billion naira within the 11-month period. What level of participation should we be expecting from domestic and foreign portfolio investors in the equities market this year?
Uh, I would like to be optimistic that the Nigerian equities market will remain attractive. But I will need to temper that with what is happening in the global economy, because generally investors will move to areas where the returns are higher and are safer. Uh, if you look at the money tightening measures that advanced economies are taking to rein in inflation in the global economy, is indicative of the fact that financial assets globally are likely going to move to the debt market in advanced economies. And that might not augur well for movements to emerging markets or frontier markets like Nigeria. Uh, we actually believe that next year, or rather, we're already in 2022, that this 2022, yeah, foreign portfolio investment to equities may not really be as high as we witnessed in 2021 as a result of the dynamics of the global economy. But again, it will depend on the monetary policies that we're pursuing domestically. If the interest rate situation in Nigeria remains the way it is, and well, we're already seeing the market reacting and the yield building up. So that means that the Nigerian debt market may even become attractive and compete a little bit internationally with what yield
All
that
right.
investors will obtain internationally. So
All right.
while I fear for equities, debt may still be okay.
So the biggest story for the week, the stock market, listen of by introduction of Boa Foods on the consumer goods sector of the NGX. What is the outlook for the company's share price, appreciation and dividend for the financial year performance?
Yeah, the prospect is very bright because Boa Foods is a highly diversified agro-based enterprise with a track record. The company has been existing since 2005, and its products are very popular in the market, and the company is profitable and doing very well. All the areas where the company operates is more or less like a leader. You know. So the prospects are very, very bright, and is really a significant inclusion into the capital market, because you can see the impact straight away on the market capitalization, the way it has taken it up, and the way investors have reacted. It's a rare opportunity for such an iconic enterprise to be listed in the capital market.
But
So
how do you see this,
investors,
Mr. Adore? How do you see this latest, listing? How do you see it deepening the equities market?
yes, uh, one of the drawbacks of the equities market is its shallow nature. You see, if you look at uh, the contribution of the equities market to the GDP is less than 13%, so which means therefore that the Nigerian equities market is not integrated fully with the economy. And the reason is because a lot of enterprises that occupy the commanding heights of the economy are not listed in the market. So when we have an enterprise like Boa Food, following the heels of Boa Cement, listing in the market, it's a welcome development because it deepens the market and it takes the market to the level where it can start to serve as a barometer for the economy, where we can actually look at the equities market and then predict what will happen in the economy. Unfortunately, that is not the case now. And so we are expecting more enterprises that occupy the commanding heights of the economy, like what Boa Foods has just done, to come on board. In this respect, I'm subtly making reference to the Dangote refinery that will commence operations this year, which is going to be uh, a big enterprise. And it will be a wonderful addition to the equities market if it is listed in the market. And so when you have a market that is deep, that is not shallow, it means that the investment outlets are many and can absorb a lot of financial assets and prevent the kind of damage the markets suffered during the meltdown in 2008, as a result of the fact that the market was very shallow. And so the avalanche of financial assets that dictated the market could not be absorbed by the market. And so it eventually created an asset bubble which almost collapsed the market. So with
Right.
these kinds of enterprises coming in, then the possibility of such a bubble forming will
Okay.
become very remote in the
Okay.
market.
All right, Mr. Adore, but I'm curious now, how keen are investors, towards the shares of, Boa Foods in contrast to its listed sister company, Boa Cement?
Both enterprises are iconic and they satisfy different investment objectives. As a matter of fact, one of the cardinal principles that investors need to observe is that principle of diversification. And because we are having a lot of iconic, profitable, and safe enterprises in different sectors of the market, it gives opportunities to investors to diversify their holdings. And so there is no competition. In fact, they are complementary. The entry of Boa Foods into the equities market complements the presence of Boa Cement in the market. And as a matter of fact, if there are more enterprises still not in the market in BOA group, they should feel free to share in the wealth that BOA group is creating in Nigerian economy.
All right.
So it's a wonderful development.
All right. All right. Well, we'll keep tracking, that stock to see how it performs in 2022. All right, Mr. David Adorn, stockbroker, High Cap Securities. I want to thank you so much for coming on the program this evening, and enjoy the rest of your day.
Always a pleasure. Have a happy new year.
Happy New Year. All right, now let's have an outlook for next week in the capital market. We see the central bank is expected to roll over 77.61 billion naira T-bills maturities to market participants at next week's primary market auction. That's one to watch. And inflows from the OMO maturities of 60 billion naira expected at the fixed income market. Analysts expect fixed income market activity to be weak depending on the market liquidity situation, and fixed income investors await the publication of first quarter 2022 FGN bond issuance calendar by the Debt Management Office. Traders expect FGN bond yields to oscillate around current levels next week, pending clarity from the DMO regarding the execution of the FG's domestic borrowing plan for this year. And lastly, full year 2021 financial results and dividend announcements are expected to trickle in at the equities market from next week, which will continue to support buying activities in the market, even as institutional investors continue to search for clues on the direction of yields in the fixed income market. And that's all on the program tonight. Thank you so much for watching. I'm Ladi Williams. Do remember to stay safe and stay invested. Bye for now.